Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to discuss two tech companies that some of Wall Street's top analysts believe are a strong buy for June 2021. And for each of these companies, we're going to take a look at their current operations, the company's financials, their future expected growth, and go over the bullish thesis coming from these top analysts. And these two tech companies have been flying over the past few years, but recently have undergone a slight pullback from their 52-week highs as the overall market has transitioned out of tech companies and into more value plays. But these analysts believe now is a great opportunity to buy the dip in these two strong companies and expect them to grow for many years to come. So before we jump into that first tech company, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for daily videos. And the first company included in this article from Wall Street's top performing analysts is ticker AMD, which is Advanced Micro Devices. The company currently trades for $80 per share and is up by 54% over the trailing 12 months. They have a market cap right around $97 billion, and this is a leader in the semiconductor industry. But AMD has fallen away from the 52-week high, which came back in January 2021, right around $97 per share. And from that level, the company is now down over 17%, and it now may be a great opportunity to buy the dip on this fast-growing tech company. And we can see that analysts are bullish on the stock. They have a buy rating set with a price target of $116. And they believe going forward, the company will continue to grow their market share, steal it away from Intel, and AMD is going to be the number one chip maker in the corporate and personal computer industry. And going forward, they believe the entire company's revenue and cash flow will accelerate at a very fast rate, averaging over 20% growth per year. And they believe that their current market share at only 20% of the PC client market will grow to over 50% in the next few years. And they believe going forward, big other semiconductor players like Taiwan Semi will favor partnerships with AMD over their competitor in Intel with new deals and after existing contracts run out. So overall, a lot of positivity coming from these analysts surrounding AMD and the future of the company over the next few years. And if we jump over to AMD's investor presentation, we can see they already have a wide suite of products serving many different areas of the tech sector, and they provide the chips for multiple different types of computers and hardware devices. They have different personalized PCs, office-based PCs, cloud network chips, and everything you can imagine AMD produces. And going forward, they have a massive total addressable market through their data centers, PCs, and gaming for a total of $79 billion, which is absolutely phenomenal. So a ton of room for them to continue to grow and gain market share in a fast expanding industry. And we can see that they're already partnered with some of the biggest tech companies in the world, all the FANG companies in Google, Amazon, Microsoft, and many more. And we can see they also have international exposure through partnerships with Baidu, which is a Chinese-based company. So overall, very strong partnerships across all of their different divisions, and I believe it will set AMD up for a very strong future. And of course, taking a look at the financial numbers, they have also performed very well over the recent years. A mass acceleration in revenue throughout 2020 from 6.7 billion all the way up to 9.8. They see growing gross margin, and their EPS has been climbing as well. And if we take a look at the actual income statement, so we get a 5-year trend of their total financials, we can see that back in 2016, they generated over $4.3 billion in total revenue, and every year since then, that number has continued to grow. And we've seen major acceleration over the past few years. Ending 2019, they had $6.7 billion in total sales. 1 year later, at fiscal end 2020, they had over $9.7 billion of total revenue, a major expansion. And now in the trailing 12 months, that has grown to over $11.4 billion, which is absolutely phenomenal. And if we take a look at the bottom line, this company is profitable as well, with over $2.8 billion of net income over the past year, and they're funding their future growth with their current cash flow. And we can see they also have major projections for fiscal 2021 of total revenue growth right around 50%, a gross margin of 47% overall, and a tax rate of 15%. And if we take a look that over the longer term, so this is a medium-term outlook, we're going 3, 5, 10 years in the future, they believe they can still grow their revenue at a CAGR of 20%. Their gross margin will grow to be over 50% on the long-term chart, and they believe going forward, they can maintain a free cash flow margin that's above 15%. So this is going to be a highly profitable business for long into the future. And also, as a tech company operating in the semiconductor space, the high margins and the profitability allow them to have a very strong financial position. And taking a look at the balance sheet, currently they have short-term assets of $7.2 billion. Compare that to short-term debt of only $2.8 billion, a current ratio well above 1 and very, very sustainable over the shorter term. And one thing I like about AMD is they have very little long-term debt on the balance sheet. Total liabilities for the entire company come in at $3.5 billion. And currently, their short-term assets sit at 7.2. So their overall ratio is above 2, and they can pay off every dollar worth of debt on the entire company's balance sheet and still have half of their current assets left over for the next 12 months. So a very strong company. And what I like to see is that throughout 2020 and the global pandemic, a lot of businesses were unsure, and the companies with a lot of debt got hit the hardest. But we can see that throughout this timeline, the company has done a fantastic job of reducing their debt to a very low level. From over $1.4 billion of long-term debt back in 2016, they have continuously paid it out without issuing any more, and now sit at only $313 million of long-term debt on the balance sheet, which is pretty much nothing for a company of this size. And taking a look at the cash flow statement, they continue to accelerate their cash generation as well, which is a very strong sign, and they're funding their future operations with their current free cash flow. And we can see a few years ago when they were outlaying more cash than they were bringing in, that's normal for a growth company, but they have since rebounded and are now generating massive amounts of cash flow to over $1.7 billion in the past year. So pretty much everything we want to see from a strong growing company, strong revenue and income growth, a healthy balance sheet, reduction of long-term debt, growing cash flow, everything that we want from a strong company, AMD is showing at this current point in time. And going forward, analysts are also bullish on this stock, projecting a 28% annual expansion rate every single year for the next 5 years. And currently, the stock priced at $80 is below the 12-month expectation of $108 per share, implying another 20% upside from this current level, and they are considered a buy, coming in at a 2.3. So not only are the analysts from the article bullish on this company, the average from Wall Street Analysts on Yahoo Finance also like the stock as well. So AMD, definitely a big tech company, valued at around $97 billion, with fast accelerating revenue, nicely profitable, and going forward is expected to be a main player in the semiconductor industry with growing market share for the next few years. So that was the first company we're going to discuss today for this episode. They were included in the article from Wall Street's top performing analysts. And now if we continue on into the second stock we're going to discuss in this episode, it is ticker ZS, which is Zscaler. They currently trade for $194 per share and have grown by 156% over the past year. And like I mentioned at the start of this video, this is a high-flying tech company that exploded throughout 2020. They currently have a market cap around $26 billion, and in terms of valuation, they are much more expensive than Advanced Micro Devices, AMD. So I just want to put that in perspective when evaluating these two companies. But they are considered a buy at this current level, and according to Wall Street Analysts, the company reported another jaw-dropping quarter. They saw billings growth of 71%, which crushed the analyst expectations by over 20% for the quarter as well. So the company is performing very strong, and they're the leader in the cloud-based cybersecurity industry. And at this current point in time, the analysts are bullish with a buy rating on the stock and a price target of $240 per share. So it does imply another 20% upside from its current level. And we can see that from the high point, or their 52-week high of $226 back in early February 2021, the stock is now down around 14%, so a slight pullback from that all-time high. And analysts do believe that the cybersecurity sector as a whole will grow, but especially the cloud-based networks that need security, which is where this company operates. And taking a look at the investor presentation, they now have over 200 patents. The company is leading with over 5,000 customers, and they serve a massive total addressable market valued at $72 billion. So overall, the company continues to see more customers use their system. They have a large market to attack, and their total billings and revenue continue to grow year over year. And currently, they operate from 150 data centers. They serve over 160 billion transactions every day. You heard that right, 160 billion plus transactions every 24 hours. They have over 7 billion enforcements per day, and they operate with 200,000 security updates every single day as well. And the company is funded and uses 75% renewable energy, which is a great sign, and they've proven they can scale their business all around the world like we see here. So the company is dominant on a global scale, and one thing to know is their revenue is actually coming in from all around the world and not solely North America. So currently they have over 5,000 customers, over 20 million licensed seats, and the company now operates in over 150 data centers all around the world. And that massive transaction number that I've mentioned already is 10 times the size of Google's daily transactions, which is absolutely phenomenal. And like we mentioned from the analyst report, their billings over the past quarter grew 71% year over year. Their revenue growth was an astounding 60% year over year, and their dollar-based NRR grew 126% as well. Their operating margin at 13% is on the lower end right now, but as they achieve greater scale, I believe that number will rise again too. And taking a look at the company's total revenue numbers, every single year they have seen some major expansion. From $126 million of total sales back in fiscal 2017, it grew by 51% to $190 in 2018, then $303, and now $431 million of total revenue in fiscal 2020, representing a growth rate of 42% year over year. And something to know is that every single quarter, their total revenue continues to grow as well. Quarter after quarter, their expansion continues to over $176 million in the past 90 days, which grew 60% over the prior year. And taking a look at the growth rates, 48, 36, 40, 46, their growth rate has actually accelerated over the past 3 quarters to over 50% each and every time, which is a very strong sign. And something to know is that this company is not solely operational within North America. And actually, 49% of their revenue comes from the rest of the world, from Europe, Middle East, Africa, and Asia, and only 51% comes from the Americas, making up North and South. So overall, this company is nicely diversified all around the world and is not solely reliant on one single market to fund their future growth. And as kind of a software-based cloud security company, and as a leader in the individual sector with their own patents and their own technology, they have very high gross margins. And currently, they sit at around 80% overall, which is absolutely phenomenal, and maintaining a high gross margin ability over the longer term will allow this company to become a very highly profitable tech name for many years to come. And for the tech sector, especially software companies, maintaining a gross margin of 80+% at large scale really will set you apart from many of your competitors. And going forward, analysts do believe their total sales will grow at a fast rate moving forward, and we can see they're forecasting $658 million of total top line for the current year, representing growth of over 52% year over year. And for next year, fiscal 2022, they're forecasting over $888 million of revenue, representing another 35% growth rate over the 2021 number. So big expected sales growth continuing to flow in over the next few years, and taking a look at the overall expected growth of 66% averaged every single year for the next 5 years going forward. And the stock is currently sitting as a buy, coming in at a 2. And right now, the current 12-month expectation coming from 25 different analysts sits at $232 per share, well above the current $194 level. So Zscaler was the second company we're going to discuss in this episode. They are also included in the list from some of Wall Street's top performing analysts. They like the stock as a whole. They like the cloud-based security sector, which Zscaler is a leader in right now. And because of the global operations, the scalability of their business, they just think as a whole, this company will see revenue growth and generation for long into the future, and have the stock as a buy now with a price target of $240. So that was the second company we're going to discuss in this episode. We're going to wrap it up now. I want to thank you for watching to the end. I'm the Gen Z Investor. Just remember, I am personally not a financial advisor. Nothing in this video was a recommendation. This was just us discussing a random article found on CNBC from some of Wall Street analysts and their other recommendations for the stock market and two specific companies. I'm not making any recommendations. Please seek financial advice from a trusted professional before you make any buying decisions, and do your own research into any company discussed in this video or in the channel. So now that I've said that, I want to thank you for watching to the end. Please hit that like button and subscribe. I'm the Gen Z Investor, and I will see you in tomorrow's video.